Kathy Wood of ARK Invest believes that growing institutional allocation purchasing power and use cases will drive the Bitcoin price. With this emphasis, she believes the Bitcoin price will hit $1.48 million by 2030. Of course, if this prediction comes true, it can be termed as a crypto explosion. But can we wait until 2030? When are we going to even find a way to escape from the current bears? It's been a captivating 6 months in the battle between cryptocurrency companies and the US Securities and Exchange Commission. Since the initial coin offering craze in 2017, the SEC has been seen as a hostile regulator of the cryptocurrency industry. It has since been criticized for regulating through enforcement action rather than cooperating with the industry to make a clear path forward. Cryptocurrency exchanges and spot Bitcoin ETF applications approvals have been denied. Crypto companies like Coinbase have said that they have met with the SEC many times with no resolution or clarity. However, things have begun to work in their favor. More recently, the SEC has faced various defeats in court that further suggest the need for it to be more proactive in regulating the industry. In April, Coinbase filed a petition for a writ of mandamus in the United States Court of Appeals for the Third Circuit, instructing the SEC to act on Coinbase's previously filed rulemaking petition. In May, the SEC responded, arguing that its regulatory rulemaking regimen is not delayed and that the SEC was not withholding any decisions already made. However, the tide changed as the SEC filed a lawsuit against Coinbase, alleging it was an unregistered exchange because it allowed the sale of certain crypto tokens the agency considers to be securities. That lawsuit got us to where we are currently at today. It was like stains were smeared on the cryptocurrencies involved. In August, Coinbase asked a US judge to dismiss the SEC lawsuit, arguing that the cryptocurrencies sold through the exchange were more like baseball cards than investment securities. Our core argument is simple. We do not offer investment contracts, as that term has been constructed by decades of Supreme Court and other binding precedents. Coinbase Chief Legal Officer Paul Grewal posted on X. However, the SEC has been losing out on most of its cases recently. Does this mean that crypto now has a winning edge? In July, the SEC suffered a loss in its legal battle with Ripple over the XRP digital token. While the district held that Ripple's initial sales of XRP to institutional investors constituted the sale of unregistered securities, the court acknowledged that Ripple's sales of XRP to public buyers on digital asset exchanges, as well as the distribution of XRP as compensation to employees and third parties, did not constitute the offer or sales of securities. In late August, Grayscale had a victory against the SEC in its quest to convert the over-the-counter Grayscale Bitcoin Trust into a listed spot Bitcoin ETF. The SEC had previously rejected Grayscale's application, explaining that the products were not adequately designed to prevent fraudulent and manipulative acts and practices. In October 2022, Grayscale sued the SEC, and in August, its petition for the review was granted, and the SEC's order to deny Grayscale's spot Bitcoin ETF application was dismissed. The court concluded that the SEC did not offer any explanation as to why Grayscale's application should be denied. Now, it seems like the last straw has broken the camel's back. According to reports, members of the House Financial Services Committee wrote a letter to SEC Chair Gary Gensler, urging the regulator to move forward with the approval of ETF applications. The letter stated that a spot Bitcoin ETF is indistinguishable from the crypto futures ETF for which the SEC has already approved. Now, it seems like the SEC is at wit's end. It was even rumored that Gary Gensler might be removed as the SEC chair altogether. Well, the approval of spot Bitcoin ETF will usher in a new dawn for the crypto industry. These court wins for crypto companies are currently noteworthy, but they may not resolve the issues completely. The SEC continues to have oversight of the nascent cryptocurrency market, and it may take congressional action to settle. However, a Bitcoin ETF will permit investors to put money into the crypto market in a much easier way without having custody of Bitcoin. People have shown interest in this product. Companies like BlackRock and Fidelity have applied to offer a spot Bitcoin ETF. The House lawmakers have urged the SEC to approve the outstanding applications, quote unquote, immediately. The spot Bitcoin ETF remains a hot topic in the crypto sphere. The SEC has denied applications for this investment vehicle for years. In the first half of 2023, Bitcoin and other cryptocurrencies bounced back from the 2022 big losses. The crypto winter exposed weaknesses in the digital currency markets, including exorbitant risk-taking, illegal securities promotions, and outright fraud. The actions of the SEC further worsened the situation as it appeared to be cleaning up the crypto industry in a hurtful way though. SEC Chair Gary Gensler has made it clear his belief about the vast majority of cryptocurrencies being securities, according to the Howey test. All these companies should come into compliance with the law, and until they do, we will continue to pursue them as the cop on the beat and investigate and follow the facts and law, Gensler once told Congress. mentioning Bitcoin as an exception. Crypto regulations are important, but what would we do if they were withholding the crypto explosion we hope for? According to a senior crypto analyst, Nick Ranga, rigorous crypto regulation is a double-edged sword for crypto investors. Stricter regulation of cryptocurrencies would certainly protect investors who are the ones who lose out when exchanges like FTX collapse. Regulation would likely place limits on how crypto could be used and may stifle innovation within the sector, she said. Nevertheless, despite these conflicting sentiments, Bitcoin seems to have won a spot in the hearts of many people. Even Gary Gensler is excluding it from his crypto rage. According to the US Senator Cynthia Lummis, a devoted Bitcoin supporter, adding Bitcoin to retirement accounts despite the market downturn is not a bad idea. I am very comfortable with making sure that people can include Bitcoin in their retirement funds because it's just different from other cryptocurrencies, Lummis recently shared. This is not her first time expressing support for Bitcoin. At the CNBC Financial Advisor Summit in June of 2021, Lummis urged Americans to incorporate Bitcoin into their retirement plans as part of a balanced strategy. In a 6-month-old CNBC interview, she reiterated this emphasis. We can't blame anyone for being disinterested in Bitcoin or crypto in general. The market has suffered some serious setbacks since the time it had combated the FTX fiasco, followed by a sea of bankruptcies and panic. However, we cannot continue to cloud our minds with fear, right? Besides, a crypto explosion is set to happen. When? Well, that isn't necessarily certain. The spotlight is not only on Bitcoin, Ethereum has also secured some wins as well. According to recent reports, institutional financial firm VanEck, which manages more than $77 billion in assets, is set to launch the VanEck Ethereum Strategy ETF, an exchange-traded fund that invests in Ethereum future contracts. As the rush to offer crypto-related investment products among Wall Street firms continues, VanEck is one of the largest institutions to put its weight behind the adoption of cryptocurrency. According to a video report, VanEck has announced the upcoming launch of an Ethereum futures ETF, fueling bullish sentiment in the market. For many crypto investors, the addition of this ETF is evidence that the growing adoption of cryptocurrency in the world of traditional finance is inevitable. To me, this just speaks to my original thesis years ago, that if crypto is the future, they are going to have to add crypto to all financial products we have in the traditional world, and crypto is going to be a part of that. And this is what we are seeing, an expert noted. Furthermore, it was recently disclosed that Ethereum had reached over $10 billion in cumulative revenue since its launch in 2015. As a result, this growth rate outpaces many of the largest software companies in history. It took Ethereum around 7.5 years to reach $10 billion in annual revenue, faster than Meta, which took a little over 7.5 years, and Microsoft, which took 19 years. With these reports, the crypto market is about to be launched into a new season. The chances are high. During an interview, ARK Invest Cathie Woods was asked to elaborate on the research from her firm that predicted the Bitcoin price would reach $1.48 million in the next 7 years. Focusing on the factors that influenced her team's research and drove the price targets, she explained that Bitcoin's value should increase 9-fold or more by the start of the next decade, thanks in part to growing institutional adoption. Wood also pointed out that Bitcoin's rising value as a hedge against inflation as something that will drive up demand in the coming years. Things will indeed get better from here. But that's going to do it for today's video. Make sure you click on subscribe notification buttons, and we'll see you in the next video.